All right, let me go across. Nimesh Chandan joining us, CIO at Bajaj Asset Management. Take a pause on the conversation with Kunal. Nimesh, great having you. It's been a while. And frankly, it's a good time to have you simply from a perspective that you look at the domestics and you look at consumption in a big way. And some of those numbers, it's always good to zoom out and kind of focus in on really performance and results rather than about everything that's happening in markets live, right? So give us a sense. How are you looking at some of those numbers? You know, value retail has come out with numbers. You've got the likes of a Marico, a Trent. I'm not going to ask you stock specific. How are you looking at consumption trends at this point?
Hi, good afternoon, and happy to be here on your show.
Very good afternoon.
And day to be here. So, let me put it this way: when we were in the midst of the conflict in March, and when we were looking at oil prices going up, some kind of oil prices also passed on to the Indian consumer. Then things started getting a little better in April and May, and we thought this quarter will be a write-off because you will see so many businesses having either shortage of energy or impact of inflation coming there. And then we had the El Nino talks also. But considering all that, the quarter has actually gone quite well. The initial updates that have come from banks, from some of the consumer companies are actually quite good. And it's not specific to some segments only. Yes, jewelry has done fantastically well, but across the board, if you see grocers, if you see quick commerce, if you look at real estate, automobiles, so things are actually looking up, and the economy seems to have absorbed the problems that were there because of the Middle Eastern crisis. In fact, I think we'll have a very good festive season going forward, considering the way we are doing in the first quarter in terms of updates. And we are quite bullish on the market overall. But specifically for domestic markets, the economy and businesses are doing well. And this year and next year also, we will see good earnings growth. Specifically Nifty, where earnings growth was missing. For domestic sectors contributing the way they are, I think we will do very well.
Right, Nimesh, hi, good afternoon. This is Nehi also joining in. It's a particularly good day to be speaking with you because, very recently you've shared your view that you're looking at Nifty touching 27,000. On a day like this where we're seeing almost a 2% shave off coming in across the board, does that view hold?
So when we were at a high in September 2024, and if somebody said caution that let's look at valuations, let's be a little more skeptical about the kind of rally that we've had in mid caps and small caps, and we were laughed at that time. And now when actually things are turning around, things are looking very bullish. If I'm making a bullish comment, actually I get trolled a lot on that. But that's how markets are. And it pays to be contrarian. The most profitable opportunities come when you look at a contrarian view. Not that you have to have a stubborn dissent to what the crowd is saying, but using fundamentals, understanding crowd behavior, it looks like, see, we are at probably the end of the crisis. I mean, today's comments are in a way some kind of frustration that the president of US is showing, and he's very vocal online in social media about it. So that's why the market got spooked. But it looks like the traffic in Hormuz is normalizing very well. The oil producing nations are saying they will increase output. In fact, they are worried about demand, so they are actually cutting prices. And with India, we are so well placed with various nations, oil producing nations, that we are getting our supply well. We have been able to get through this majority of this crisis well. So we are towards the fag end. Yeah, I don't know exactly which date it will end, but these are opportunities. I don't think these are times to worry. At least what the facts that are on the table right now. If they change substantially, then I will change my view. But so far, view on 27,000 Nifty fair value continues.
Point. And Nimesh, since you are playing contrarian and since you are saying that it's a good time to go out and buy, what is it that's looking the best at this point?
So we have actually placed our portfolios in two different buckets. The one half is looking at cyclicals, so financials, industrials, and materials. The second bucket is looking at mega trends, where companies say in healthcare, in consumer discretionary, beneficiaries of AI and data centers, those areas we are looking at. So it's a good split between value and growth or cyclicals and mega trends. And there are many things to play with here. I mean, so many things at attractive levels in the broad market as well as in the large caps. Within financials, we like private banks, we like some NBFCs. Within industrials, we like defense, we like power, we like auto ancillaries. Within materials, we like cement, we like metals. And healthcare, hospitals, as well as pharmaceuticals are doing very well. Specifically, CDMO or CRAMS companies are doing extremely well. The results are also coming out quite good with that segment. And lastly, consumer discretionary. We have seen a pickup in consumer spending. We are yet to see the full impact of income effect because of income tax rate cuts, savings effect because of the GST cuts, wealth effect because of the gold prices moving up, and also interest rates coming down in the economy. So all the fuel has gone in. We are just waiting for it to charge the vehicle ahead. Sentiment should turn. I think if the sentiment turns, the market will touch a new high.
And spike in crude, Nimesh, what's the impact of that on ground, on earnings that you're estimating? You've spoken about all of these sectors. I'll probably try and dissect some of those as well in terms of asking you for views. But talk to us about the earnings impact, because earnings have been a drag last couple of financial years. That's one of the other reasons why FI seem to be exiting and all of the pressure with regard to the index as well. How do you see earnings growth given the fact that you're seeing crude again head towards $80? It's real time. But what happens if, say, crude stays at 80?
So one of the trends I've seen recently is that we are letting the flows data impact our fundamental view. It should be the other way around. We should be looking at fundamental view and then deciding whether flows have come and the valuations have moved up. So, yes, there was a time when we were seeing some kind of earnings cut, slowdown coming in, and then we were seeing outflows also. But you have to keep in mind between 2020 and September of 2024, India had outperformed emerging markets by 75%. And at that time, we were not seeing that how many countries we are crossing or how many countries we are bigger than in terms of market cap. When the flows started turning negative because valuations were high and earnings were getting cut, yes, there was some impact of that. And last year has been a very eventful year. There have been wars, there have been tariff negotiations, there have been tantrums. So we've gone through all of that. We are at the fag end of the problems and probably just about ending them. And so much positive has come from the government side, from the RBI side. I think the positives are not yet priced. The negatives are probably in the price. Regarding crude, if you see at least last 1 month, whenever there is a negative news about crude, it moves up less. And whenever there is a positive, moving towards resolution, the crude falls even sharper. So this is showing you the kind of sentiment in the crude markets that we are seeing less bullishness on crude prices when things are going wrong and more bearishness when things are going right, which means the trend is towards the down. Yes, there could be these bounces coming off and on. And I think today people are reacting more to the statement rather than anything else. And it's nothing to say that these negotiations will end or we will not have peace soon. So I'm still in the camp that we don't have any data points that say we are going back into a crisis. We are coming out of a crisis, which means crude prices there should be more pressure for crude prices to go down. And because of that, we will see earnings to be better in this year. This year, Nifty earnings could be about 12% is what the consensus view is. But if you see mid caps and small caps, they are growing at high teens or early 20s. So there's a lot to choose from there in the broad market.
I'm going to pause this conversation for just a bit, Nimesh. Unfortunately, there's too much happening at the same time. I'm going to take a quick pause on this conversation, give you a bit of a breather. Go across. We're joined by Jay Bala from Cash the Chaos. And it's a great time to kind of figure out whether how much of this chaos is actually worth cashing into. Great having you here, Jay Bala. Give us a sense, this 2% fall, how are you looking at the index, the levels?
Hi, good to be on your show. I've been bullish on the markets for some time now, And when it comes to crude, when it was trading at about 100 and 110, I'd called for a crash in crude, and I still hold that view. And in fact, very recently, as the last couple of days, I had said the extreme short-term crude is oversold and it's due for a bounce. But the longer-term trajectory remains that crude hits below the December 2025 low, below $54, and probably much below that. So there's no change either in the view of crude or in the view of Nifty. I'm expecting record highs past 29,000 on the Nifty, and I was bearish on Nifty on one day after the top in 2024. When the Nifty hit October 2024, and I turned bullish on the Nifty on the second week of April. And that view of Nifty heading to 29,000 in the medium to long term, that still remains.
29,000 on the Nifty, Jay, that's a level that you're watching out for, especially on a day where the market has seen such a sharp correction. Would it be right to conclude that you're looking at this market as a buy on dips market? And if so, what would be some sectors that are looking good on the charts?
See, that's right. See, if you look at the sectoral indices beyond the Nifty, we have seen BSE capital goods hit record highs, metals hits record highs, mid-cap hits record highs. We got the Nifty small cap 50 hit record highs. And so it's the broader market and the health of the market is very strong. And we have the Nifty next 50 hit 52-week highs. So the large caps catching up is just a matter of time. The reason why the Nifty large caps are held back is because of the weakness in the IT sector. IT sector probably has got one final low below the July low, but it's not sensible to preempt the market. Let the signal come from the market itself. Until IT reverses, there might be some drag on the Nifty, but I believe the April low of 22,182 on the Nifty, April 2026 low, that's not going to go. I anticipate in the very short term, probably a gap fill somewhere around the region of 23,500, and then the Nifty to take across the recent high of 21st April 24,602. I think that needs to be crossed for confirmation that the Nifty is heading much higher. So until that, there will be short-term, ambivalence for the large cap Nifty, but the broader market health is telling you that it's very healthy. In fact, I missed out the Nifty pharma index. Although that's a lightweight, that's also at record highs. So the health of, if you look at the markets beyond the Nifty, the markets are very healthy.
Hi, good afternoon. Sajid here. How do you look at the three top weighted stocks, ICICI Bank, HDFC Bank and Reliance? From a financial point of view, we've seen some kind of, build up to these stocks. Do you think that that will be one important trigger now?
Yeah, absolutely. See, Reliance, HDFC Bank and ICICI are the elephants in the room. But, the banking sector is starting to look slightly better because we got higher highs and higher lows for the banking sector. And, if you look at the India 10-year bond yields, I had said a few weeks ago, in the middle of June, that the Nifty 10-year bond yields 10 years have got a double top. So, and I had projected a price level of about 6.6 to 6.49. So when the bond yields drop, it helps the banking sector. So what we are seeing today, as the bond yields rise to about 6.759, it's just a counter trend bounce. We still got juice for the 10-year bond yields to Indian 10-year bond yields to decline closer to 6.49. That will give tailwind for the banking sector. So the main worry remains to be Reliance. So until Reliance crosses 1345, it remains in a downtrend. The weight of the downtrend is still there. But even there, I don't see a downside beyond the 1225 for Reliance. So Reliance is one thing that you need to be a bit cautious. So once that turns around, the whole market will turn around.
In today's market, you're seeing some bit of strength coming from Wipro, Bajaj and ONGC. Otherwise, the entire Nifty pack is down there. What's yours? You spoke about Nifty IT as a whole, but some of the stocks like TCS, Infi and Wipro?
Yeah, the IT sector is still not to be touched at the moment. If you are looking at IT sector, you need to look beyond the frontline names. If you look at something like Tata Technologies, that's the strongest within that space. But even there, we want the large cap ITs to bottom, then the mid caps can outperform. You can look at something like Newgen Software. If it closes above 537, until that you don't want to touch it. So IT is still an avoid. But I think it might be in the last phase of a climatic sell-off.
Jay, buy today, buy tomorrow. When do you go out, go long? Because the kind of knock you're seeing on the index today, should you go long today, wait a day or so, wait for more data coming in?
So like I said, the short term there is ambiguity in the price structure.
Right.
So I would look for the markets to bottom the recent gap that the markets had in the early part of in the early part of June. That was between 23,600 to 23,800. So this zone is likely to provide support for the market. If the markets were to turn around from this zone, then you got to get bullish. So there is a bit of wait and watch in the short term. But if you look beyond the large cap Nifty, I'm very bullish on the Nifty reality space. I'm anticipating it to go back to the 2024 highs. So that's and if you look at something like Phoenix, it's at the record highs. If you look at something like DLF or prestigious states, they are giving you excellent opportunities. So you got to look beyond the large caps names, but if you look at sectors that are going to do well, and I'm very bullish on the capital goods space, including energy and different stocks. So I expect BSE Capital Goods Index to clock something like 72,000 and then reverse and head to something like 99,000 from a 3 to 6 months perspective.
Jay, thank you. Thank you so much. We'll let you go on that note. In fact, we were in conversation with Nimesh and he mentioned about that one statement from President Donald Trump where he declared that the Iran ceasefire is over, saying the US has launched fresh strikes after Iran allegedly targeted ships in the region. Trump also renewed criticism of NATO allies over their stance on Iran and accused countries, including the UK and Italy, of not allowing the US to use military bases. Listen in.
To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Witkoff, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time dealing with them. They're liars. We make a deal. And if I make a deal with him, we have a deal. And he goes out, he talks. We make a deal. Everyone's agreed. No nuclear weapon. We make a deal. They go outside, talk to the press. They say, we never even talked about it. There's something wrong with them. They're cuckoo. As far as I'm concerned, it's over.
Talks won't resume after we get through the funeral proceedings. Does this mean that talks with Iran will not resume?
I don't care. They can talk, but I think they're wasting their time. They're a bunch of lying guys. I do my whole life. That's all I do is deals. My whole life that's how I became president. I guess that's a deal too, right? But I made a lot of money. I had a lot of great success, tremendous success. Everything I did, I was successful. And I deal with these guys, and I say, this is from a different school. They're liars. They're cheats. They're sick people. They've hurt their people. They killed 54,000 people as of now that were protesting. You know, when people say, how come they haven't taken over? They can't take over because they're dead. They killed them. Nobody's going to take over. They have no guns, and the other side has machine guns. And they're killing them. The press doesn't report it. But they're bad people. They're bad people. And frankly, I don't want to waste my time with them. Now, I'll let our wonderful negotiators keep talking if they want, but I don't see it. I don't like these people. You know that? I like him. I like the leaders. I think all of these leaders.
Great. And they love.
I think they didn't treat the United States fairly for many years, but that's okay. But they're sane, rational, good people. Most of them. I don't like a couple of them, to be honest. But there are a couple I don't like much.
That was President Trump talking about the ceasefire. He's saying it's over, and as a result of which we have seen the crude jump nearly 5%. We still have Nimesh Chandan with us. Nimesh, Are we also seeing margin trade triggering here? Because if you look at the margin book, Reliance had the highest margin book of nearly over 2,000 crores, followed by Infi at 1,800, TCS at 1,500, and HDFC Bank also has around 1,500 crores of margin book there. The sudden fall, do you think that that's also one of the triggers why suddenly we've seen a lot of pressure on the market?
So that's very interesting because one of the things that I worry about is leverage in the market, and whether it is higher volumes in futures and options or higher volumes in margin lending or loan against stock. These are things which at some point of time, because of stop losses that people hit, uh, these are forced sellers when there is a downturn, and time is against them, right? These traders can't wait for a longer time, and at some point of time something is triggered, and especially in a volatile environment, uh, there are many times that many of these traders get whipsawed or the stop losses get hit, and that creates more volatility in the market, hitting ultimately somebody else's stop loss. So yeah, this is one area that actually is adding to the general volatility and specifically towards the downside. Because when these stop losses get hit, there is a pressure more on the downside rather than it hitting pressure on the upside.
And you think that because of the kind of build-up which has happened, now the margin book is roughly around 1.34 lakh crores. The the large caps are at risk because of the kind of the domino effect that comes into play here.
See, at some point of time, intraday, anything can happen in terms of margins and volatility. But if one segment is getting affected, it does affect the movement in the other segment as a comparable uh, valuation or comparable movement. And then somebody can take profit from there to buy into another. So it may start with maybe large cap, but I don't think, or specific stock, but I don't think it is for the short term, it can spread there. And especially when events like these, which affect the overall economy and the crude prices that affect the overall economy, it is possible that each segment is getting affected. Today, I think all the indices are equally down, whether it is large cap, mid cap, or small cap.
Nimesh, what's the view on IT at this point?
So now we are at a dilemma where we've been bearish, we've been underweight all this time. Now the valuations get a bit tempting, and see, there is a difference between the promise of AI and what they are delivering currently. There will be some time gap between where they deliver their promises. Till now, we have been actually in AI adjacent trades, like for example, power sector, data centers. Those trades we have taken positively. We've been underweight on the IT side. Now, frankly, valuations are tempting. These companies, unfortunately, still have a very cyclically slow growth rate. Uh, Maybe a statement like I'll wait for the quarterly numbers and the commentary and then decide on them is better rather than jumping in and catching the falling knife now.
Understood, and really appreciate your views. Thank you so much for your time today, Nimesh. So good to be speaking with you, especially on a day like this where we've seen such sharp cuts coming in on the Nifty. But your view is sounding positive, and thanks for sharing a bunch of your sectoral views as well. Thank you so much for your time today.